If you're considering purchasing silver right now, take a moment to reflect. Not because it's the wrong move, but because without truly grasping what it entails, you could overlook the real value it offers. Silver is more than just a commodity. It's a choice, a statement, a dividing line between those who simply react to circumstances and those who actively get ready for them. I recall the first time I made a purchase driven purely by anxiety. Prices were climbing. Everyone was buzzing about it. My pulse was racing faster than any plan I had. That's when I discovered something important. Owning an asset doesn't automatically make you ready. Becoming someone who truly understands the reason behind their purchase is what does. If you're investing in silver, you need to brace yourself for what lies ahead. Not disorder or alarm, but accountability. Because intelligent investing is never solely about the asset. It's about the person making the investment. Consider someone like Warren Buffett. He doesn't follow the noise. He analyzes value. He readies himself for downturns before they arrive. While others spiral, he strategically positions himself. That's not fortune. That's a way of thinking. And that way of thinking is cultivated well before any profit is earned. Silver symbolizes security, but security without self-control turns into mere speculation. If you're accumulating silver but lack an emergency fund, you're left vulnerable. If you're banking on price surges without developing your own capabilities, you're off balance. Wealth is a framework, and silver is just one component. Think of it like growing a tree. You don't just dig a hole and expect fruit overnight. You nurture it, shield it, and give it time. Investors who thrive understand cycles. They don't insist on immediate results regardless of the season. Some of the most accomplished entrepreneurs didn't just spread their investments. They expanded their skill sets. Elon Musk wagered everything on his vision. Sarah Blakely created Spanx through unwavering belief and ingenuity. They built mental fortitude long before seeing financial gains. The asset was secondary. The mindset was primary. If you're purchasing silver, ask yourself, are you also investing in education? Are you developing additional revenue sources? Are you eliminating unnecessary debt? Because genuine readiness means reinforcing every pillar of your financial foundation. Here's the pivotal change. Stop approaching things like a consumer. Start approaching them like an architect. Acquire assets that safeguard you, cultivate skills that strengthen you, establish habits that quietly accumulate over time. Study financial reports, learn market patterns. Monitor your spending the way an investor monitors exposure. Rise earlier. Practice self-control in small areas because discipline accumulates just as capital does. Most people desire the comfort of stability without enduring the difficulty of preparation. But wealth doesn't respond to feelings, it responds to persistence. Silver may climb, markets may shift, opportunities will surface and vanish. But the individual who prevails over time is the one who prepared when things were steady. Preparation goes unnoticed. No recognition, no spotlight, just daily effort. Perhaps that means dedicating only a portion of your portfolio to precious metals. Perhaps it means launching a secondary business so you aren't reliant on a single income. Perhaps it means trimming expenses for half a year so you can invest from a position of strength rather than urgency. Every piece of silver you acquire should serve as a reminder of something more profound, self-sufficiency. You're not preparing out of fear, you're preparing for independence, and independence demands bravery. The bravery to diverge from the masses, to envision the long game, to trade today's comfort for tomorrow's security. If you're committed to buying silver, be even more committed to investing in time, education, well-being, and adaptability. Because when opportunities present themselves, only those who are ready can seize them without delay. This isn't about forecasting what's ahead. It's about becoming unshakable within it. So treat this moment with intention. Polish your plan. Fortify your thinking. Establish multiple income channels. Invest deliberately. Spend less than you earn. Rise above the distractions. Purchasing silver isn't merely a financial choice. It's a proclamation that you favor preparation over panic. Most people enter markets emotionally. They respond to price shifts, to conversations, to the anxiety of being left behind. But when you intentionally decide to acquire silver, you're doing something distinct. You're stepping away from the reactive crowd and into a posture of strategic foresight. You're declaring, I refuse to wait for uncertainty to arrive before I take action. Preparation is quiet. It doesn't trend. It doesn't seek praise. It occurs in moments when nobody is paying attention, when you deploy capital thoughtfully, when you examine long-term patterns, when you choose restraint over impulse. Panic, by contrast, is loud and infectious. It spreads rapidly and compels hasty choices. When you purchase silver with purpose, you're conditioning yourself to act before the chaos starts. This transcends metal. It's about identity. The person who prepares thinks in a fundamentally different way. They establish emergency reserves before crises materialize. They reduce obligations before strain intensifies. They acquire assets before scarcity becomes apparent. Silver becomes an emblem of that discipline. Each ounce reflects a decision to plan ahead rather than scramble in hindsight. Look at disciplined investors across history. They didn't sit around waiting for ideal circumstances. They gathered value when it was being ignored. They quietly fortified their positions while others were sidetracked. Preparation instilled in them confidence, not overconfidence, but the grounded assurance that comes from thoughtful positioning. When you embrace preparation, you also accept accountability. You recognize that wealth isn't constructed through wishful thinking. It's constructed through design. You evaluate risk, you diversify thoughtfully, you prevent overexposure. You connect your purchases to a broader blueprint that encompasses income expansion, skill building, and lasting resilience. Approaching silver with this perspective reshapes how you perceive opportunity. You stop pursuing short-lived spikes and begin valuing long-term safeguards. You stop gauging success by daily price changes and start gauging it by steadiness and durability. Preparation alters your bearing. It steadies your choices. It hones your concentration. It cultivates inner security well before any external affirmation surfaces. And once you absorb that identity, the identity of someone who prepares, you no longer act because others are panicking. You act because you resolved long ago that your future warrants foresight, discipline, and purposeful effort. And if this message stirred something within you, if you sense that quiet resolve building, don't hold it back. Like this video, subscribe to this channel and pass it along to someone who needs to think more expansively about their future. Because wealth is created by those who prepare, and preparation begins now. The asset by itself won't rescue you. The thinking behind the acquisition shapes your trajectory. Far too many people assume that possessing something valuable automatically grants them security. They believe the metal, the stock, the business concept is the solution, but ownership without comprehension is brittle. If your reasoning is flawed, even robust assets can slip away from you. Mindset is what empowers an asset. Without discipline, a wise investment devolves into a wager. Without patience, a long-term holding morphs into a short-lived emotional transaction. Without clarity, you'll sell at the earliest hint of trouble and buy at the earliest hint of excitement. The distinction between those who accumulate wealth and those who chase it is seldom the asset itself. It's the psychology steering the decision. When you purchase silver, or any asset, you're entering a relationship with unpredictability. Prices shift, conditions change, opinions fluctuate. If your mindset is reactive, every movement feels threatening. But if your mindset is calculated, volatility transforms into data rather than dread. You start posing sharper questions. Why am I holding this? What function does it serve in my portfolio? How does it safeguard or stabilize my financial picture? Successful investors aren't shielded by assets alone. They're shielded by groundwork, analysis, and emotional composure. They grasp allocation. They steer clear of overcommitting. They reason in proportions, not impulses. The asset is merely an instrument. The mind is the designer. Consider entrepreneurs who constructed enduring companies. They confronted uncertainty relentlessly. Revenue wavered, competitors surfaced, markets evolved. But their mindset, tenacity, flexibility, long-range perspective enabled them to navigate instability. The same truth holds for investing. If you cultivate patience, short-term fluctuations won't rattle you. If you build conviction grounded in analysis, you won't rely on outside approval. Mindset also influences behavior beyond the transaction. Do you keep learning? Do you assess your exposure? Do you bolster your earnings so you're never compelled to liquidate at the worst possible moment? An asset may grow in value, but if your habits are reckless, you'll never fully benefit from its potential. Authentic financial security stems from harmony, asset strategy aligned with emotional restraint, risk management aligned with enduring objectives, confidence aligned with understanding. When your mindset evolves, your investments mirror intention rather than impulse. And once that transformation occurs, you're no longer depending on silver or any asset to save you. You're depending on the caliber of your reasoning to steer every decision you make. Wealth is constructed in layers: protection, production, and personal development. Most people attempt to leap directly to visible achievement. They seek returns before stability. They want gains before infrastructure. But genuine wealth is structural. It's assembled carefully, purposefully, and patiently. The initial layer is protection. This is where assets like silver fit in. Protection means you aren't completely exposed. It means you acknowledge that unpredictability is inherent to the process. So you establish a defensive stance before it's ever necessary. Protection can take the form of tangible assets, emergency savings, minimal debt, or varied holdings. It's the bedrock. Without it, every financial disruption feels devastating. But protection by itself doesn't generate expansion. That's where production comes in. Production is your capacity to earn income consistently, your profession, your enterprise, your side ventures, your cash-generating investments. Production is forward motion. It drives growth. If protection is the shield, production is the engine. Many people concentrate solely on defense but neglect to power their engine. Without production, you're preserving but not progressing. Then comes the most undervalued layer: personal development, expertise, knowledge, wellness, emotional intelligence. These are invisible assets that amplify everything else. If you enhance your abilities, you raise your earning capacity. If you refine your discipline, you handle risk more effectively. If you deepen your market comprehension, you make wiser decisions. Personal development compounds quietly, yet its returns are immense. Examine accomplished investors and business builders. They never relied on a single layer. They protected capital, constructed income systems, and perpetually upgraded themselves. They read, they studied, they evolved. When industries transformed, they transformed alongside them because their base wasn't solely financial, it was competence. When you grasp that wealth is layered, your decisions sharpen. Buying silver becomes one element of protection, not your complete strategy. Starting a venture becomes one element of production, not your sole lifeline. Pursuing education, mentorship, and self-mastery becomes part of growth, not a dispensable extra. Layered wealth fosters durability. If one area falters temporarily, the others sustain it. If revenue dips, protection keeps you anchored. If markets waver, production persists. If obstacles emerge, your personal development equips you to respond wisely. This layered method eliminates desperation from your approach. You cease gambling everything on a single outcome. You cease hunting for quick fixes. You begin building with patience, reinforcing each tier with intention. And as each layer strengthens the next, your financial reality becomes less vulnerable, more deliberate, more organized, more equipped to withstand adversity while continuing to grow. Discipline multiplies faster than money. Small, steady habits forge financial resilience. People frequently undervalue the impact of repetition. They search for dramatic turning points, major victories, sudden breakthroughs. But enduring wealth is rarely explosive. It's systematic. It's forged in unassuming routines that appear trivial in the moment, yet become unstoppable over time. Think about setting aside a modest portion of your earnings every month. Initially, it feels sluggish. The advancement seems negligible, but month by month, year by year, that regularity establishes a base that most people never experience because they abandon the effort prematurely. The same concept extends to investing, learning, building connections, and honing abilities. Minor actions repeated with intent generate momentum. Money grows mathematically, discipline grows behaviorally, and behavioral growth carries even more force because it influences every dimension of your life. When you condition yourself to invest consistently rather than emotionally, you reinforce patience. When you monitor spending habitually, you deepen awareness. When you repeatedly sidestep unnecessary debt, you strengthen willpower. These practices amplify one another. Observe top-tier athletes or thriving entrepreneurs. Their advantage isn't a single spectacular feat. It's everyday discipline. Rising early, drilling fundamentals, reviewing game plans, correcting missteps. Financial achievement operates identically. Examining your portfolio monthly, reading a few pages daily, researching markets weekly, upgrading one skill each quarter. These modest practices shape your financial character. Most people hold out for motivation, but discipline doesn't wait. It functions whether you feel enthused or not. That's precisely why it compounds more rapidly than money. Because while markets bounce around, your habits keep operating. Even amid turbulent stretches, disciplined people continue saving, continue studying, continue positioning. Picture two investors. One responds to every price movement. The other invests methodically and analyzes long-term trends. Over time, the second investor's emotional equilibrium becomes a distinct edge. Fewer errors, reduced anxiety, superior timing. That advantage compounds in silence. Discipline also insulates you from extremes. It curbs overconfidence during upswings and restrains panic during downturns. It grounds your decisions in structure rather than sentiment. And when routines are solid, you don't need to reinvent yourself with every setback. You draw on systems already in place. Small, consistent financial habits may seem unremarkable today, but repetition converts ordinary actions into remarkable results. Each disciplined choice reinforces the next. Each managed impulse deepens resilience. And gradually, those seemingly minor decisions shape a financial life that is stable, strategic, and steadily progressing through purposeful repetition. Wise investors prepare during tranquil periods so they can move decisively during volatile ones. When everything appears stable, when markets seem foreseeable, when income flows smoothly, that is exactly when preparation counts the most. Because calm is never permanent. It's a window of opportunity, and those who see it use that window to quietly strengthen their footing. Preparing in peaceful times means assembling reserves before adversity strikes. It means assessing your portfolio without any sense of emergency. It means paying down avoidable debt while obligations are still comfortable. It means studying market rhythms while emotions are level. During calm stretches, decisions are sharper because fear is absent and clarity is an invaluable edge. Most people hold off until upheaval forces their hand. They adjust only when hardship compels them. But at that point, options have shrunk. Prices may already reflect the change. Windows may have closed. Astute investors act early. not recklessly, but with intention. They recalibrate, they spread risk, they fine-tune their strategies while conditions still permit agility. Consider farmers who fortify their land well before any sign of a storm. They reinforce buildings, they stockpile resources, they service equipment. They don't wait for dark skies before shoring up their foundation. Investors with this philosophy create financial cushions. They increase accessible funds. They position defensive assets. They develop several income streams. So when turbulence arrives, they aren't scrambling. Peaceful periods are also prime for learning. You can study without interruption, evaluate without alarm, contemplate without pressure. This is when lasting vision takes shape. When uncertainty inevitably emerges, those who prepared don't need to react emotionally. They already factored in volatility as part of the journey. Assurance during uncertain stretches doesn't stem from predicting correctly. It stems from groundwork completed in advance. When you know your allocations are balanced, when you understand your comfort with risk, when you have reserves ready, sudden shifts don't leave you frozen. You respond with purpose. This outlook transforms how you experience uncertainty. Rather than viewing it purely as danger, you recognize it as motion, and motion often births opportunity. Investors who prepared and during quiet periods can commit capital when others waver. They can negotiate when others withdraw. They can stay firm when others crumble. Preparation goes unrecognized during stable times. Nobody applauds it. Nobody notices the moderation, the meticulous planning, the gradual refinements. But when conditions change, the contrast becomes vivid. Those who utilized calm productively stand firmly rooted. Those who disregarded it feel exposed. And the gap between the two was established well before uncertainty ever appeared, through intentional, disciplined steps taken while everything seemed routine. Diversify not just your portfolio, but your capabilities, revenue channels, and mental toughness. Too frequently, people view diversification as a strictly financial tactic, holding varied assets, distributing capital across industries, limiting exposure to any single market. That matters. But meaningful diversification runs deeper. It reaches into who you are, what you're capable of, and how you adjust when the landscape shifts. A diversified portfolio can mitigate financial risk. A diversified skill set can mitigate life risk. If your livelihood hinges on one source, you're exposed. If your expertise is confined to a single niche, you're vulnerable. But when you build a range of competencies, communication, negotiation, technical proficiency, leadership, you broaden your earning capacity. You become versatile. You become relevant in more than one setting. Consider business leaders who flourish across sectors. They may begin in one domain, but their foundational abilities, analytical thinking, discipline, strategic vision, allow them to adapt. That versatility is itself a mode of diversification. It shields them from sector-specific slumps. It opens new avenues when familiar ones constrict. Income diversification operates on the same principle. A primary occupation paired with investments, a side endeavor supported by long-term holdings, passive revenue layered with active hustle. Each stream reinforces the others. If one decelerates temporarily, the rest provide equilibrium. This eliminates desperation, and desperation is frequently the catalyst behind poor financial judgment. Resilience is the ultimate layer. Emotional fortitude, mental sturdiness, the capacity to stay grounded when plans derail, markets oscillate, opportunities transform, or unforeseen hurdles appear. If your sense of security rests on one result, you'll feel unsteady. But if you forged resilience through lived experience, continuous learning, and disciplined routines, you remain composed even when circumstances shift. Diversification also cultivates broader insight. When you comprehend various industries, you detect patterns others overlook. When you explore different investment vehicles, you evaluate risk and return more rigorously. When you develop an array of skills, you tackle challenges with creativity. This mindset turns uncertainty from a menace into a terrain of possibility. Rather than dreading change, you equip yourself for it by expanding your range. You don't depend on a single gamble. You don't depend on a single paycheck. You don't depend on a single iteration of yourself. By broadening your portfolio, your talents, your income sources, and your resilience, you construct a system that is dynamic instead of brittle. You lower concentration risk across every facet of life. And as each layer bolsters the others, you assemble a structure capable of absorbing strain, adapting wisely, and continuing to advance through deliberate expansion of capability and strength. Genuine financial freedom arrives when your strategy, character, and courage surpass market volatility. Many believe freedom is a figure in a bank account, a target net worth, a particular income threshold. But numbers by themselves don't yield freedom. If your emotions surge and plummet with every oscillation, you're still tethered. If fear governs your choices, you're still restricted. Strategy is the first pillar. A defined allocation blueprint, clear risk boundaries, long-term outlook. When you understand why you hold what you hold, volatility becomes less daunting. You comprehend the function of each asset. You expect cycles rather than being blindsided by them. Strategy lends order to uncertainty. But strategy without character is fragile. Character is discipline exercised when nobody's observing. It's being truthful with yourself about risk. It's resisting greed when values climb and resisting panic when values drop. Character keeps you from deserting your plan at the initial sign of discomfort. It anchors you to principles rather than whims. Courage rounds out the equation. Courage isn't careless speculation. It's deliberate action in the face of the unknown. It's investing when others hold back, but only following careful preparation. It's building something even when success isn't assured. It's prioritizing lasting growth over immediate gratification. Look at investors who weathered multiple market cycles. They didn't endure because volatility vanished. They endured because their inner foundation was sturdier than external turbulence. They honed strategies. They absorbed setbacks. They adapted without losing course. Their assurance arose from preparation and experience, not prediction. When your strategy is sound, your character is disciplined, and your courage is resolute, volatility relinquishes its hold on you. Price fluctuations become information, not upheaval. Temporary reversals become lessons, not defeats. You react with analysis rather than anxiety. This is when financial freedom starts to feel tangible. Not because unpredictability has disappeared, but because you're no longer rattled by it. Your plan absorbs the turbulence. Your habits sustain your trajectory. Your mindset stays even. Markets will perpetually shift. Conditions will perpetually evolve. But when your internal fortitude eclipses external commotion, you operate from lucidity. You invest from purpose. You grow from conviction. That harmony among strategy, character, and courage produces a degree of autonomy that can't be easily disrupted by passing waves of volatility or evolving conditions in the financial world.